Hi guys, my name is HTrade and I am a partner trader of Wesley Trades HQ. Wesley Trades HQ is a trading Discord community for traders out there like forex traders, stock traders, futures traders, etc., etc. And we are a very closed community, or we're a good community, a good trading community. There's a lot of other communities out there, but I absolutely love this specific trading community. And everybody is there to help everybody at the end of the day to succeed, because everybody can make money out of the markets at the end of the day. Like, no matter from which background you're coming from, what your age is, etc., etc., no matter what your circumstances is, anyone out there can make money out of trading, and you can work from any place that you want in this world. All right, so as I mentioned, I am a partner trader of Wesley Trades HQ. Now, we do have live trading sessions every single week, at least up to 3, 4, 5 trading sessions or live trading sessions per week. Like, this is one that we had on Friday. This is one that we had on Thursday, etc., etc. So you can go back and you'll see. So we basically hold them in the Wesley Streams section. And the one that's presenting the streams is Wesley Trades himself. And it gets recorded as well. And at the end of the day, it also gets posted to the Wesley Trades YouTube channel. So you can have a look on YouTube, search for Wesley Trades, and you will just find the Wesley Trades YouTube channel as well. All right. Like I said, every single day's recording will be done, posted, etc., etc. And as you sign up for any accounts, or like broker accounts or prop firm accounts, please have a look at our section where we post what do you call it? Let's have a look here quickly. The discount codes. So there's a discount code that you can make use of for basically all the trading prop firms out there, called Wesley Trades. So just use the discount code Wesley Trades, Alpha Futures, Lucid Trading, etc., etc. Apex, you name it. There's a lot of them. Also, if you take a look at the YouTube channel and any of the YouTube videos, like the latest one, for instance, right? Take a look at the description inside the video, then you'll find where you can place those discount codes, and you can get like 80% off on Apex, 40% off on Lucid Trading, 10% off on Alpha Features, etc., etc. So yeah, just have a look. And we also have socials, like there's the Discord link, there's the Instagram, there's X, etc., etc. All right. So the purpose of this video is to do some backtesting for this week of trading. So I always post all my trades in the journal under the trade journal section. So let's just quickly have a look here. Actually, I want to show you something. So this week I started an eval based on my trading strategy that I have already posted one video on, as well as the second part is basically just the back testing, or actually the forward testing using that strategy. All right, and I will post the links to the strategy once a week for people to go and have a look if they really want to follow my strategy. Like, for instance, when I opened the eval on Friday, I did this trade here, and as you can see, it's on MNQ. All right, MNQ. I was looking for a bullish trade. Price moved Made a breakout, market structure shift on the 5-minute time frame. We retested, we printed the bullish candle, and I was immediately in the trade, and I closed the trade off with $336. There we go. Every single trade, I follow a very mechanical step-by-step direction, and it must look as easy as possible. Otherwise, I do not go into the trade. So if the trade setup does not look clean, I will not take that trade. All right, so let me just quickly show you my trading results. Now, currently Tradeovate, I opened up a prop firm account, and currently Tradeovate is down, but I did only take one singular trade on Friday, and I made 326 profit. There we go. Cool. You see that? And that's it. There's literally no other stats that I can show you at this point in time. And I already earlier went to Tradeovate to check the statistics, but it didn't load. It blocked my IP address for some reason. I have no idea why. So there's nothing I can do about it. But let's get started with the backtesting. So that's what I wanted to show you guys. So first of all, we need to use the replay tool, which I'm going to use now. Let's click on replay, start, and go to Sunday. There we go. Cool. Right. So first of all, we need to find our bias. And clearly my bias is just looking with my eyes. It says bullish. Why? Because this is a low, this is a high. This is a low. This is a internal high, internal low, internal high, internal low, high. Newer high. Higher low, higher high, not really yet because we haven't closed above it. So this is an internal high, internal low, internal high, internal low. Actually, we did close above here, so this is a new high, higher low, higher high. So this is why I am bullish there, right? So let's quickly mark out our liquidity levels, which is, let's just do this quickly. There we go. Let's just do this quickly. Okay, whoops. Yeah, something like this. Let me zoom in quickly a bit. All right, so I'm going to now mark out my most recent Fibonacci guide for the higher time frame, which is from the most recent low before this high got broken to the most recent high. There we go. Right, cool. Liquidity levels. As I explained in my strategy video that I've also posted at the end of this weekend here, Friday afternoon. This is my strategy guide and forward testing for one day, and this is my strategy guide forward testing the rest of that week from the 21st of April to the 24th of April. Cool. Very recent weeks, actually. Okay, so let's move forward. So you guys will have to catch up on that strategy video where I explained what is external and internal liquidity. So let's mark out our liquidity levels, right? So clearly the most recent high is the external liquidity. Most recent low is internal liquidity. All right, so we're going to mark out all the internal liquidity that we can see. This is internal liquidity, as well as this going up, going down, going up. Turning point, that's liquidity. This is also a liquidity, but it's anyway part of this fair value gap here. So this is internal liquidity going up, going down, going up. Right. Internal liquidity. Okay. Gonna mark these weeks out. It's also part of this fair value gap. All right. Up, down, up. Internal liquidity. Here we go. All right. Next. Internal liquidity. And this is also internal liquidity. Actually, this whole area here is internal liquidity. So you can mark it out from where the body, the lowest part of the body of the candle, extend it there. There we go. Right, cool. That's internal liquidity. This is internal liquidity. And that's internal liquidity. You can mark this out as well, like if you want to up, down, up. You can do this. Right, no problems. As long as you know where it is, it's fine. Right, so let's start. Cool. Right, let's move forward. Okay. Asian session. Whoa, stop. Interesting. So you see, these levels that I marked out have already been taken during the beginning of Asian session, and it left a very small gap there. And what it tries to do when it took this liquidity, it made a response from internal to external. There we go. That's external liquidity, which is your take profit target. Cool. Boom. There we go. So I don't usually trade Asian session, but this was a very good trade. Very, very good trade. In any case, let's move forward. London session is around here. I'm gonna pause here. No, let's move forward. Okay, there we go. Cool. So we need to adjust this Fibonacci tool as well. Let's click on it, drag it. Yeah. All right, that is the overall bias. Right. In any case. So what did we do? We tapped into this fair value gap, which is already internal liquidity, as well as this turning point. Yeah. This is now a new turning point of interest for liquidity. And we are searching for what? We're searching for a buy. Okay. Okay, let's zoom in a little bit. Let's move because now we're looking for our trades. We're actually looking for a liquidity grab first, which we very nearly get here. That's literally a few points off. I would say this has been taken. If it was any other broker, it would have been easily tapped there already on this liquidity. So now, what's next? What's next? So now we're waiting for a market structure shift, which we get here. Oops, 5-minute time frame, which we get here. There we go. So we get a market structure shift here. Actually, let me just quickly go and get my my bias and paste it here so we don't get lost. Bullish, because what? Liquidity grab first. Step number 1 is completed. Step number 2, microstructure shift. Step number 3, retrace to breakout level or a level on the fib or a fair value gap. Now we wait. Where's our... here's our fib tool. Now we wait for retracement. There is a very, very small retracement, but not even near enough to 45% or 50%. Okay, let's do this. I'm going to anchor this. All right, keep on adjusting the fib retracement, but it's already clear to me like it didn't give a proper retracement. Here it gave a retracement, but what's the issue? what is our TP target? Our TP target was already well in this area already, and price started going down, right? So and it's close to pre-New York as well. So this move during London session, if we would have wanted to buy, we would have waited for price to go up, retrace in some way, and then go up. Would have bought inside this area here as it goes up. So this is a missed opportunity. There's nothing we can do about it, and we have to move forward. Of course, now it's pre-New York, 8:30. So there's no way you can now take this setup anymore, as you can see. And what did price also do? Price broke out of all-time highs, started going down, tapped into this fair value gap here, and now it's selling. So you don't want to be at the bad end of this kind of move. As you can see, now it's New York session. Right, cool. So now we focus on New York session. New York session on the 3-minute time frame. So we take that low. And now we wait for a setup. I'm going to draw a line here on 12. Okay, because any trade that I want to take during New York session, I want to take before 12 p.m. Then we're completely out of the macro. Then it's done. You don't even have to look any further. All right, so price went down, up, down, up, down. So this is the high that we are focusing on there at this point in time. Let's just move forward. Okay, price is going up. Tapped into this liquidity, so we're looking for buy still. This is the high. We haven't closed above it. Now we wait, and we wait. We haven't closed above it. Remember, you need to keep an eye on your internal liquidity as well. So this is your low, and this is your high, and then everything else in between is internal structure. Wait, wait, wait. Nope, I'm done for the day. Right? No trade on New York. There's nothing you can do about this. This is all internal structure. It started playing around, playing around, playing around. Why? Because we tapped this liquidity. We took this low. We actually took this low there. You see? Let's do this. We took this low. There we go. That is a week there. You see? Price went down, price went up. Took this low. Price started playing around because it maybe wanted to buy. We don't know. But it's outside of our trading hours, so we're done with that day. So we have to move on to Tuesday. All right, so now let's just play the replay tool further along. Beautiful reaction. See, price eventually started going up after taking this liquidity here. So this was a good idea to look for a buy, but unfortunately, it's outside of our trading hours now. So there's nothing you can do about this. In any case, let's move forward. We want to go into Tuesday, which we do. There's the Asian session, and price started even. Do you see why I was looking for a buy? Do you see? All right, cool. My bias is bullish, and it's currently also still bullish. Right, I'm gonna play into the next day's London session. Only then I can update the liquidity levels, which is around here. Okay, 2:30. I'm going to stop. Okay, now I'm going to mark out all the liquidity levels that is present currently. So this one is present. Use this one. I'm going to delete this line. Whoa, wait, I'm going to delete this line. There we go. Okay, right. So this is liquidity. Let's do this. This is liquidity that we're working with. Right, we're tapping into this liquidity already, by the way. 5-minute time frame. right? So what are we waiting for? We are waiting for a market structure shift. We already took that low also. So that's also liquidity that was taken. Internal liquidity, right? Taking this liquidity as well. Where's the rest of the liquidity? Here, here, and here. All right, so let's just move on. Okay, tapping the liquidity. Oh, okay. We already took this liquidity, by the way, so we already broke above that high. So basically we got our liquidity grab already. We broke above that high. So this is a market structure shift. Cool. Step number 1, liquidity grab. Step number 2, market structure shift. Step number 3, retracement into the fib or fair value gap or breakout level and the printing of a bull candle. So now let's do this. Okay, we patiently wait for this. All right, cool. I remember this buy. I think I bought from here. We came very close to the 45% level. There's your stop loss and your take profit is basically this line. Right? Or this high. There we go. Cool. So now we wait. And we got stop loss. That's perfectly fine. Let's just move on. You never have to feel bad for getting a stop loss for following your rules because it's a stop loss is part of trading. At the end of the day, you will have to make peace with it because you are going to get losses. And the most, basically, the amount that you're going to lose is going to be determined by if you actually stop at your loss or not. And not or a revenge trade, etc., because then you're going to lose much more. In any case, let's move forward. Still looking for a buy. Let's trace the highs. Okay, there's the one. There's the next one. Tapping into this liquidity. Going down even further. Tapping into this liquidity. There we go. Yeah, take a look on the 1 hour time frame here on the right hand side. So you don't have to take a look on the left hand side because we already marked out the levels that we wanted to mark out, right? So just watch the liquidity levels. Here, on the left hand side. Okay. Okay, and now we're getting to pre-New York. Okay, cool. So 8:30, I would stop and wait for pre-New York, which we get here, 3-minute time frame. Let's go to 3-minute time frame. So basically, you see this. I'm not sure if I would have wanted to buy. Yes, I would have. Okay, cool. So you see what happened here. Take a look on the right-hand side, right? So there's a turning point. And price took this low when New York open, right? Took the low. We already here at the market structure shift. Here. Yeah, we had a market structure shift already. And then price started going up. So this is a continuation trade. So basically you can take this buy at that buy candle and then aim for 1 to 1.5 or 2. Risk to reward. Which we got stopped out. Okay, cool. So that was a good trade. Nonetheless. Yeah, the low get broken again. Okay, cool. So this is now your new high of interest that you want to have a look at. And I need to draw a line at 12. Otherwise, I'm not going to look for any other trades after that time. Okay, the low gets broken again. The low gets tapped again here. Taken again. Ah, there we go. Cool. Take a look at this. Take a look at this. So, took that low again. What is the most recent low before we started going up? This one here. Believe it or not. That there. Now we're waiting for a retracement buy. Cool. So we're inside this setup. Step number 1, liquidity grab. Step number 2, market structure shift, which we get here. Retrace to the fib or fair value gap or breakout level. This is the breakout level. And entry on bull candle. So let's wait. Okay. Retracement to 45, not yet. Oh, there we go. Boom. Retracement to 45. Bull candle. Yes, it's a little bit off the macro, but this is still a valid trade. Because our entry model was already just before the 12 o'clock in any case. And then you aim for 1 to 1.2 or 1 to 1.5 or 2 risk to reward. Okay. Boom. Take profit hit. There we go. Beautiful. Absolutely beautiful. Right, so why again did I take this one as the high? Because this should have been the original high, because this is the original low, but it got taken here. Right? So price went down, price went up, price went down, take this low, price went up, broke this high, retracement and buy. So my mentor always says, don't always look at the most recent high and the most recent low. Yes, you can if you follow the structure, but when it comes to an entry model and the low gets taken again, take a look at the most recent high that was made just before the low got taken, before the structure shift, before the liquidity grab, which is this. We broke that now, retracement, boom, there we go. So this was a trade that I was supposed to take on Tuesday, but I was stuck. My mind was stuck at this high. So the own lesson that I'm also learning during this breakdown is don't always just look at the most recent high in the structure. If you got an entry, if you get a new liquidity grab, take a look at the most recent high that you can make use of. And use that for your entry. Any case, let's move on to Wednesday. All right, so let's move on. I'm going to turn that back to 5 minutes and then play. Damn, okay. And price went up and up and up and up and up and up. And I'm waiting for the start of Wednesday morning. Oh, there we go. I'm going to stop. So London session is 3 a.m. EST. Okay, now we can update our liquidity levels, which is clearly this. And there's a very small fair value gap. That's not clear to the eyes. I turn this off. Yeah, that's not very clear. Okay, cool. So we are going to mark this out. This is a clear new liquidity level that we can make use of, as well as this here. Okay, there we go. Boom, there we go. And what else? This fair value gap. Let's make use of this. It's fine. Let's do this. And then this level here at the bottom. Okay, cool. Let's do this. So this turning point here, that is your liquidity there. So any one of these liquidity levels can be used. Any one of them, any single one of them. We have to adjust our fib. Oh, no, we don't. You see, we're still bullish. And this is still the higher time frame liquidity level that's being kept. High time frame external liquidity. That's the high. All right, cool. So London session. Move forward. Okay, there's London open. We tap the liquidity. Now we're waiting for a market structure shift. That's the high that we can make use of. So let's wait. Okay, whoops. Now that becomes the high. Okay, that low gets broken, so now this becomes the high. There we go. All right, cool. We're waiting for the printing of a bull candle. Let's wait. Whoops, whoops, whoops. Whoa, whoa, whoa. Hello, hello. Hello, hello, hello. Okay, just one. Just one. Okay, cool. And now we're waiting for the print of a bull candle, which we get here. And that's our whole, you see. So a whole setup. So liquidity grab, microstructure shift, retracement into a fib level of interest, and bull candle, which is that. Even though it's small, it is. I took that buy. There's my stop loss. There's my take profit. Boom, take profit it. Well, around this area. So I took about 1.5 or something like that out of this trade. That's it. That was my trade. Easy as that. So I did take this trade, so that's why I'm breaking this one down a little bit faster. But yeah, it was a good trade. Very good. Very, very good trade. Very solid. I could have taken 2 risk to reward as well. There we go. 2. Could have taken 3. Barely 3. Crazy. Very good setup. Right, now let's move to a New York session. Okay. As you can see, it just went. So this is more liquidity that got taken. Let me just delete this so that I can see the liquidity levels. Let's do this. I want to keep an eye on this liquidity level there. We already tapped it. Okay, but this is pre-New York, by the way. We already took this liquidity. Okay, so let's open up on the 3-minute time frame. So that is the high of interest at the moment. Okay, whoops, there we go. Okay, we took even this liquidity as well. What liquidity? Really? Let's delete that. Okay, we took this liquidity, yeah. Right. Okay. So that's the new high of reference at this point. Let's just keep an eye on this line at 12, because then I'm not going to look for any more trades. We broke above this high, so we can actually now look for a buy. Okay, so there's the top of 45%. There's the buy. I'm not actually sure if this is a high, because there's only one single bull candle. So this was actually the high, yeah. So what does my mentor say? What is the most recent high? Just before the liquidity grab. This is not a high. This is a high. Right, so there's no buy here. We have to wait. That high is now broken. Now the high is broken. Now we're waiting for a retracement of some sort. I would say at least Fibonacci retracement on this low here or here. So let's wait. I think, what did I do on Wednesday? Did I take a buy from this? I can't remember. Let's have a look. Let's have a look. What did I do? Okay. 30th. 29th. The 29th? What is this? 29th. Right. There we go. Okay, I was tracing this. I did actually take this as the high. Wow. Then I waited for a bull candle. Entered. TP at that level. It was a very good trade, but it was outside of my strategy. Taking my take profit here. Wow, crazy. Crazy, crazy, crazy. So this was an actual trade. Unbelievable. So that's where I took my trade. I actually took a number of trades on that day. Okay, cool. So let's just watch this. Let's just watch this, right? So we already got a take profit in London. We did not necessarily get a trade during New York based on the proper strategy that I'm using. This would have been a high if it was on the 1 minute time frame. That I can definitely tell you for sure. So if I go down to the 1 minute time frame, this was a high. Yeah, you see. So then retracement buy, then this was valid, but on the 3 minute time frame, not so much. So oops. I actually broke my rules because I should have watched the 3 minute time frame and used that as the high. Okay, well, there's nothing I can do about it now. But this is just a mental note for me to not trust this as a high, because if I trusted this as a high, what could have happened is if it wasn't a proper high based on in the eyes of the market itself, what could have happened? Market could have continued downwards. See? Easily. Very easily, because this is not a high. This is one singular interruption candle. Or it's called an IC. One singular interruption candle. You see? Bearish, 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 bullish, bearish, bearish. You see, this is only an interruption candle. That's it. It's not a proper high. A proper high is formed when there's at least 2 bull candles in the direction going up, which we get here, right? Price went down. This is one move. This is one move, etc. You see? All right. Anyways, let's move forward and go to Thursday. All right. So I'm gonna just keep. Let's delete this. Let's delete this, and let's move forward. Let's delete this. Okay. Let's delete all these extra lines. Okay, and we actually broke the most recent high, I think. Oh, not yet, not yet, not yet. But you see, it's a good idea to buy here. Any case, let's move on. I'm not going to look for any trades until very close to London Open. Cool. Okay, let's just do a little bit further. Okay, let's go to the 5-minute time frame. Okay, cool. So, okay, pre-London Open. Okay, so let's now mark out all our proper liquidity levels. Okay, so since this high is now properly broken, now you can adjust your Fibonacci tool. That's the most recent high. And what is the most recent low? The most recent low is this. There. Okay, cool. Okay. Okay, so what are we looking for? Liquidity grab. There. And this is the turning point here. So the moment that London session opens, this is liquidity. Now it's liquidity. See? So price can tap into this, break structure high, retest buy. So let's wait for it. Okay. Crazy. Any case. Price just going up. Like a mad thing. I don't think I have taken a buy during Thursday morning. I waited for this. You see, I waited for that. Okay, cool. I am very happy with my choice. Very happy. Because it's part of my strategy to wait for a liquidity grab first. Always wait for a liquidity grab first before you take a buy. All right. So let's wait. Okay, pre-New York. Okay, so where's the liquidity levels that we can make use of? This one here, yes. So you can do this. Okay, let's just delete this because this is now in the way. And this. So we always wait for liquidity grab first, right? So let's move. Okay, New York open, tap this liquidity immediately. Okay. I'm definitely going to use that as a high, even though it's one candle, because it literally took like 1, 2, 3 sell candles to get past this buy. So I'm definitely going to use that as a high of reference. Okay. Okay. And we broke that again. So now this is the new high that we must use. This is the new high that we must use. Waiting for close above. Whoops. Now we close above it. Retracement. Perfect. Now we're waiting for a bull candle. Let's wait. Let's wait. Boom. There we go. Entry. That's our entry. Stop loss. Take profit will be around here, plus minus 1.6. That's perfect. And beautiful. You could have actually taken it here as well. 2 risk reward. Easy 2 risk reward trade. Literally just one movement up. Absolutely insane. Very, very nice trade. All right, cool. And then with that, my day is done. So this is actually what I took on Thursday. If I remember correctly, this is the exact trade that I took on Thursday. Let me show you guys. I was waiting for this. You see? Low gets broken. Low gets broken. There it is. No. No ways. Did I take a buy there? I can't believe that. Wow. No ways. No, that doesn't make any sense. Okay, what movement is this? 349. I don't. Oh, it's on the 1 minute time frame. Okay, so I was being an idiot. You see that? One. I was being an idiot on Thursday. Except instead of waiting, you see, every single time that I take a stop loss, most of the times that I take a stop loss is because of idiocy. There's no other way of explaining this. Because I should trade the 3 minute time frame on New York. So now I waited. You see, I was planning this trade. Steadily. Highs. Watch steadily the highs and lows. Steadily. Boom. And then my mentor also signaled buy. You see, I waited. Waited. Bull candle. I went into the trade and as you can see, so it's about patience. It's literally about patience. You see? There we go. If I just waited patiently on the time frames that I mark out for myself on the strategy, then I make less mistakes. So let's move on to Friday. So let's just quickly move forward and do the last day. All right. This is still New York session. Let's go to 5 minute time frame. We actually broke this high. So we're making new all-time highs again. Oh, this is pre-London. Okay, cool. So what happened here on the 1 hour time frame? We created a new high. There we go. So take a look at this. Broken close above this. Boom. There we go. So we down, up, broken close above this. There's no new low of reference. Okay. Okay, so going down. You see, new low of reference, new high of reference. Price went down, took this liquidity and went up. Boom. There we go. So now that is the new high of reference for the Fibonacci tool. And what is the new low of reference? What is the lowest point of structure before this move up? You take a look from the previous high to the most biggest low, which is this one. And that is where you put your Fibonacci tool. Click. Move it to there. Boom. That's it. That's it. That's it. Now you can delete the square and you move on with your life. All right. So cool. What is the liquidity levels that we currently have in place before we go into Friday, which is this level here currently, and then this fair value gap? Why is this fair value gap important? Because it's where the breakout is. This is the breakout here. Boom, there we go. You see, breakout. Cool. So that fair value gap is important. And now we move forward. Okay, now we have our liquidity levels ready. And now we wait. Okay. Okay, London open. Okay, we are basically tapping this liquidity. Right, there we go. And now we wait for a high to be broken. This is not a high. Okay, now this becomes the high of reference. Okay. And I wait for market structure shift. This is now the new high of reference. Okay, next. Now we break above it. Okay. Cool. So what now? Now I wait for retracements. Here we go. Okay. We'll wait for a retracement. We haven't gotten the retracement yet. Now we're getting the retracement and there's the buy setup. Okay, cool. So there's our entry. Okay. And I would use that. Or this here as my exit. Okay. Ah, got stopped out. Okay, cool. Not the end of the world. This is still our new high of reference. We're still tapping this liquidity here at the bottom. And the breakout level is here. This is now our new low of reference. New low reference. Okay, and now we wait. Oh, stop. Okay. All right, so what you need to realize is it does look like we got our market structure shift now here, right? What are we waiting for? A retracement and buy setup. But where are we right now? 8:30, which is pre-New York. But this is a proper setup. We are already inside the setup. We've been watching the setup for a while. All we do is we wait for a retracement and a bull candle. Retracement, bull candle. Goodness me. All right. That's the buy. You can put your stop loss here or here. Let's do that and aim for 25. Okay. That's 1.5 or 50. Doesn't matter. Those two. One of those two. Okay. That high. That's high right there. Okay. You could place your stop loss here as well because this is legitimate a low before this move went up, but it's not really a low. It's a low turning point, yes, but yeah. Any case, let's move forward and just keep an eye on the time. 9:30 is here, which is New York Open. Okay, I think I went out on this move here. There we go. I took my profit here. I remember this move. This was Friday. You see, there was the actual stop loss that I took as well that I broken down for you guys. And then I waited. And I waited. And I waited. I got frustrated because the take profit level that I wanted to take with this move initially have already been taken. Yeah. Any case. Then I eventually got my retracement. Went into the buy. And I exited around this level with 300 and something profit. There we go. Boom. That was my only trade for Friday, actually. The other one was a paper trade. And then I showed the guys, listen, if you wanted to learn the strategy, I've posted it here on the HTrade NQ journal. And that's it. That was Friday. Let's take a look. The rest of New York Open speaks for itself. Insane. Broke the highs again, all-time highs. Boom, there we go. You see, internal liquidity to external liquidity. Internal liquidity to external liquidity. We took this. This is also part of internal liquidity. Internal liquidity, external liquidity. External liquidity. So you just keep on following the trend, the current trend, until it breaks, because eventually the trend is going to break and then start reversing. So until then, we just follow the trend that is in front of our eyes, and that's it. So yeah, I hope you guys enjoyed this forward testing with me, and I hope If you want to learn the strategy, then just go and watch the videos that I've posted on Friday after the New York trade that I've taken. So yeah, I hope you guys have fun. All right. Thank you so much. Cheers.